Can you hear me now? Is that better? Just let me know in the chat box, please, dude. Yeah, okay. Apologies. Is the picture okay as well? How are we looking? All good? Yeah, okay. So this stream will be 1440p for anybody watching as well. So make sure to toggle that on to get some crisper definition on the charts. All right, cool. So top down, looking at the weekly, still range bound up here, right? RSI continuing to cool off, right, from this overextension up here, getting lower and lower the more range bound we are, and this is just very classic consolidation price action. We can see here the same thing, right? So it's just clear bullish momentum, continuation, resetting of the oscillators, and then movement higher again. So you can see that here, we got fully overstretched here on the RSI, looking at the weekly, then ranged for basically 260 days, 37 weeks. In doing so, completely cooled off this overextension and then went for another leg up, broke out of this range, went for another leg higher. So these patterns of consolidation are very normal, they're very healthy, and they are simply resetting momentum to fuel the move higher if continuation's on the cards. So that's the weekly picture. Then we go down to the 3-day, and we can see that that process with a lot more clarity here. Overextended on the 3-day, bearish divergence as we did so. You can see that both across the RSI and just about the AO as well here. So price making higher highs, oscillators making lower highs, completely overextended and now cooled off and sat right at the 50 level, okay? So this is unchanged from last week. We know that the 3-day has been around the mid-level, which makes it a very plausible area for a bounce and a move higher here. Unless we're looking to go and then reset the weekly and bring it even lower with a more extended period of consolidation. But the 3-day is a plausible argument to say that we will see some relief here and start moving to the upside again. So that's the 3-day picture. Daily unchanged, right? We're still very much range bound up here. 12-hour has a slightly different and more interesting picture. The only real update from last week's review, to be honest. And what you can see here is price is basically, so we had this sell-off here. Price has gone sideways. All it's done is move sideways. But the AO is showing clear signs of momentum teetering off. And basically what it's showing here is an indication. It's giving us a clue of what the market will do next, i.e. move to the upside. It's not a technical divergence per se. I had a class with my group this week. We were going through technical divergences. This isn't one of those. This is simply a clue that the AO is giving us as to the market's intentions, with price going sideways and the AO just sort of curling up here, okay? Whether we see any play out or impulse off the back of this is yet to be seen. I'm not here to predict. I'm just showing you the observations and what I'm looking at in the charts and what the charts are telling me, okay? So it goes slightly lower, 8, 4, really not much going on, okay? Just been pure trash PA, absolute chop solidation. Nothing particularly actionable. I haven't taken a trade for the last 2 weeks, I believe. Really not much to be done here. I'm not just talking about BTC, I'm talking about the crypto markets as a whole. It's been very, very stagnant. It's a time for journaling, reflection, touching grass, and enriching your lives with all the other things that life brings outside of the markets. Again, hourly, same picture, right? This is the only market participants that can operate here as scalpers. I am not a scalper myself. That's not where my edge is. But again, this is the only sort of, the only participants that could operate in this area would be scalpers. And they would likely be looking at order flow to trade this chop. Without the data that order flow brings, it'd be very, very difficult. So if we flip over to the delta, we can see here what that would look like, right? For instance, taking a sweep of this low here in harmony with the delta here, right? So delta and liquidations, looking for mean reversion, small percentage moves. But again, that's not what my style is. That's not where I want to focus my efforts. I'm very, very happy sitting on my hands, being patient, letting the market resolve itself and looking for better opportunities to come. What's up, Angelo? How are you, dude? All right, so ETH. Again, top down. At a key point here, where I discussed this last week, had a very critical point here. This is basically the point where bulls need to step in to defend weekly market structure, especially looking at the line chart. It's very, very clear here. And we can see basically what's happened in here is this has just been a trend line that's been pretty much defended along the way. Regardless of any deviations such as this, we have retained bullish market structure throughout the entire process. And again, a very critical point for ETH to defend. Yes, the weekly has lost its 50 level, so that's a negative to this. But that being said, we had an extended sell-off here, a clear buy up. We can see that in the wick structure of the last week. And a pivotal point for ETH on the weekly. Go down to the 3-day, it's exactly the same scenario. Looking at line chart again, you can see that here into this cluster of demand or market structure defense zone, however you want to look at it. And a very, very key point for ETH here to defend on the 3-day, weekly and higher timeframes. So daily, putting in an interesting picture here. Again, going down to the 12-hour, you can see exactly the same structure across the awesome oscillator that I was talking about on BTC. Okay, so again, ETH going sideways here. Nothing happening at all. AO curling up, right? So the awesome oscillator is very good at giving us clues as for what's likely to come. I'm not saying this is an absolute probability. I'm saying that this is a likely probability. Looking at the awesome oscillator and the clues as to what it's giving us in terms of momentum. And again, nothing really of note on the 4-hour and lower on ETH. All right. So let's take a look at the deltas. So this is another argument to support moves to the upside. We're looking at BTC here on the aggregated delta chart. Members of my group will know this template very well. So essentially what we're seeing here is just continuation of delta being skewed to the negative side, right? So what this means is that any market selling that's occurring within this small lower time frame range is being absorbed by bids. We know that the heavier hand in the market operates within limit form, whether that's bids or asks. And yeah, we've seen a little bit of positive here, but largely speaking, it's been very much skewed to the negative side, which substantiates the argument further of a bounce from this area. ETH less so, a little bit more two-way, yeah, but again, largely skewed to the negative side on the delta. So let's take a look at some of the alts. Sol weekly, same as last week. Again, pivotal point for Sol, similar to ETH in that regard. This is the point to defend market structure. This is where you want the low to be put in for continuation. See that clearly across the line chart here. Again, we can probably meme on a trend line, something like so. Lose the low, and this starts to look very different. But until then, absolutely no cause for concern. We're still holding on to this weekly 50 level on Sol. We still haven't lost the low. So in terms of moving into Sol for a long position on the spot side, this is a sensible area to do so because you have clear and clean invalidation. If we start losing the low, if we start breaking below the trend line, you can cut those longs, you can cut that spot bag, whatever it is. But until then, it's a favorable position to start scaling into Sol. Same goes for ETH, right? Reason being is because it's not just sort of a buy, hold, and pray scenario when you're moving in at these sort of areas. You have clean invalidation. You know exactly where you'd be likely to be wrong on the charts. Lose the trend line, lose market structure. You have very, very valid reasons to get out of your position. But until that happens, we play the trend until the trend gives up on us, right? So what I mean by that is we've been in an uptrend so far. We keep defending the lows. And we would assume that we do so again, just based on probabilistic odds. But if we don't, then you have clear invalidation. You can cut that position. So again, same picture on the 3-day. Same picture on the 3-day, apart from the fact that we've lost the mid. Went through this last week. It's been very choppy around this mid area, so not particularly phased by the 3-day. For me, keep it simple, flick over to line chart, and just, it's all about market structure defense zones, right? So this is where bulls need to step in. And let's just observe and see if they can, right? Let's see if they do. Let's see if they have the gusto to keep this going or not. Again, a very pivotal point in the markets, especially across ETH and Sol on the weeklies and the higher time frames. And just to note as well, just to go back to this sort of trend line that I'm superimposing on the charts here. So there are two types of losses of trend lines, right? There are two types of losses. Sometimes what you'll see on social media is stuff like this, right? Well, before that point, actually. So it'd be something more like this, right? And people go, okay, no, we've just lost the trend line. This is looking mega bearish, right? There's a distinction here, okay? We need to see that hold and close underneath. Otherwise, it's basically just a sideways break of the trend line. What I mean by that is trend lines will naturally break when price consolidates sideways. So what can happen is this. We are simply just ranging for an extended period after a violent move to the upside. So we do something like this and then move up, break out, and the market is simply operating within range dynamics. Doesn't really give a fuck about this trend line. Okay, all it's doing is cooling off. And this is exaggerated, of course, because we're looking at the 3-day here. I'm not saying Sol's going to move up in 2026. I'm just trying to illustrate a point from the perspective of technicals. This is very different. Breaking a trend line sideways is very different to breaking a trend line aggressively to the downside. So if we start doing stuff like this, then that's more of a cause for concern, obviously, because this has basically just been a sustained move from taking out the higher time frame highs. Up here, breaking a trend line aggressively to the downside. And that's a much more of a cause for concern than simply ranging and then naturally breaking the trend line and doing so. So I hope that little piece helps you understand the breaking of trend lines, what to look out for, what's not so much of a concern, and what will naturally occur in the markets. So we can skip down to the lower time frames on Sol. Again, pure trash PA, pure chop, nothing actionable at all. Okay. If you're looking to play sweeps or liquidity hunts, then you can mark out these lows here. So if we were to see some sort of resolution of this chop by taking out these lows and then moving up, that would be extremely healthy for price. Would also make for a very valid long position, something like this. And looking to play it up to the highs and potentially further. But even taking a play like this to the highs, that's a plus 3R, a sensible position. Have it align with the delta, try and see some sort of confluence in doing so, right? So when I'm looking at sweeps or moves into supply and demand, members of my group will know very keenly that I'm looking for either speed or divergences or both. What I mean by that is if we are looking for this play, we kind of want something like this to happen, right? So aggressive takeout, or even move higher. Give us more gravity for that move lower, right? So aggressive takeouts of the levels are always what we want to see, or a divergence, right? So it could be something like this that forms. Print a bullish divergence. Here, price makes lower lows. Oscillators up here start making higher lows. That's also a very favorable scenario from a technical perspective when moving into a long position. So just to recap, if you're looking at these levels, if you have alerts set here, for instance, like so, that's a sensible thing to do. Sensible to start setting alerts like this, but then also don't just blindly move into positions. Look for confluence in your trades, right? The more confluence your trade setups, the better. In this case, I'm looking for either speed or divergences. Supplementary order flow, delta is very helpful as well. We have that sort of data on Sol actively available in an aggregated sense. And yeah, just look for as much confluence as possible when taking your trades, especially when they're not trend side triggers. What I mean by trend side triggers is we are in an uptrend on Sol, we're still in a higher time frame uptrend. A trend side trigger would be taking a breakout, right? So let's say this was a breakout level here. We had another valid high here. Let's say this high stretched to here. We had another high here. Right, so we have 3 taps validating this horizontal level. Then price comes up, consolidates underneath that breakout level. Right, so we have consolidation underneath the breakout level. And then we take a long up here. That's what I mean by a trend side trigger, right? It's taking a breakout to the upside in a bull market, a breakdown to the downside in a bear market. So these are trades that can be taken with very, very little confluence. Essentially, all we're looking to do is wait for the breakout candle, wait for that candle close on the time frame of our analysis, in this case, the 4-hour, and take a move to the upside. These are my preferable plays always in trending markets, right? Moving with the trend as much as possible, aligning with the trend and its momentum. But if you are to take a trade to the downside, in this case, talking about a takeout of these lows on Sol, then just make sure you have that added layer of confluence to bolster your trade thesis, and it will serve you well. So we've been looking at dominance recently, last week and the week before. So let's look at that again, just as a refresher. What we spoke about, I think 2 weeks ago, was talking about how we are breaking the mold so far in terms of the post-halving effect of an alt season. You can see that very clearly in dominance here. Halving occurs, 33 weeks pass, and exactly after 33 weeks, we get a breakdown of dominance. What that means is we have our alt rally, right? So alts rally significantly higher than Bitcoin. We have that alt mania, alt season, whatever you want to label it as. And it's worked pretty much like clockwork. 33 bars past halving. Again, 33 bars past halving. We had the same thing here in 21 as we did here in 17. So far, we have broken that mold, right? This mold isn't something that's been heavily crystallized, of course, because we are only taking data from the fractals of 2 cycles, not 5 to 10. That being said, 33 weeks have passed, and what we've been doing here is moving up as opposed to moving down. That being said, we are starting to see some sort of movement off the back of this very ugly, bearish weekly candle on dominance, which is a good sign, of course, but way too early to be actioning anything off. Right, we need to see much more of a follow through here. We also have this divergent structure across the awesome oscillator, right, where price is making higher highs, the awesome oscillator is making lower highs, which again is showing us that teetering off momentum to the upside. It's auspicious, it's hopeful for bulls. But again, it's purely an observation, right? I'm not actioning anything off this chart. I'm not moving into more spot positions. I'm allocated on the spot side, and I'm taking that with very much a zero or hero approach, and the amount that's reflected in my portfolio says that. So if it goes to dust, then so be it. I'm not looking to start moving in and out of positions. Some of the coins that I'm in are highly liquid, low caps, and it's just that's not my style. But again, everyone's style is different. I've had multiple people asking me about how to approach the investing and spot side of things, and it's a very difficult question to answer because it's very personal, it's very contextual, very subjective. How much are you risking? Are you happy to afford what you have in your bag? Do you have other assets in your real life? You know, there's so many things. Do you have a stable job income? How much are you lynching off this portfolio? And how much does it mean to you, for instance? But again, like I say, from a Bitcoin dominance side of things, we're starting to see, you know, some sort of signs of topping signals here. But then again, we have also broken the fractal of the 2 last cycles, now moving, well, I mean, past 33. We've moved past 33 weeks, and we're now at 43. We haven't seen any moves to the downside, right? So there's been no impulse to the downside in terms of a potential breakdown on dominance. So purely observational analysis here, and yet to see what the play out is. What's up, Aaron? What's up, Slow? What's your process to mark levels, price, percentage, width, etc? Are you talking about support and resistance sort of levels, horizontal levels, breakout levels, or are you talking more like zones like supply and demand? Let me know and I'll be happy to answer your question, Aaron. So ETH BTC, a great, so the cornerstone markets or charts to be watching in terms of a potential alt rally of dominance and ETH BTC. Problem is, we've had people calling the ETH BTC low since here, pretty much, right? So the last 3 years. People have been calling for an alt season for the lows on BTC. And although we do have some signs here, looking at the oscillators, we have a weekly divergence here on ETH BTC, substantiated again by the awesome oscillator. Even though it's in a flat sense, it's still just about there, just about. And this is a good sign for ETH BTC, in concert with the fact that we've had this last week's candle with a large wick buying up the market. But that being said, super early days to call anything on ETH BTC, right? It's very, very early, purely observational analysis once again. And you can see that this has occurred before. For instance, here, we get a more severe divergence, despite the fact that the second leg wasn't in the overextended region below the 30 level. We still had a nice divergence here in December of 2023. So price makes lower lows, oscillators both making higher lows here. And if I span out the awesome oscillator, you can see that a bit more clearly. So I remember this well, right? Everybody and their mom and their dog and their grandma are calling for alt season at this point. Taking out this low, very strong weekly candle here. Bullish divergence on the higher time frames on the weekly with double div confirmation on the RSI and the awesome oscillator. And the play out, as we all know, not particularly bullish. Alt bags getting completely decimated, and I've been doing so, largely speaking, despite some outliers, for a long, long time now. Okay. Support resistance, Aaron. Yeah. So essentially anything that looks good by eye. Right, so that's a largely useless answer. Apologies there. But I'm happy to take something that looks like this, for sure. I'm also happy to use something that looks like this, but I'm not going to start doing something like this. Okay, I hope that helps in a visual sense. Trading, charting, and analysis for me is very much pattern-based. I don't tend to operate in numerical sense and quantify things particularly so. It's more visual. So I hope this does help for you, Aaron. Just it's basically use your common sense, approach it with best measure. I use zones like this for liquidity zones, like I was running through earlier on ETH and Sol, market structure defense zones, supply and demand, etc., etc. But yeah, stick to these sort of zones for support and resistance, but it doesn't have to be concrete like this. Some people simply use just straight lines, basically. And I think this can be a bit restrictive, right? Even if you're using sort of making it as wide as possible, it's still quite restrictive. So I prefer using zones like this, but just be sensible with them. Don't stretch them too far, make them reasonable, and it will serve you well. So let's take a look at alts. We can try and run through a few markets and try and get a holistic picture of what's going on. So there's quite a few interesting cases at the moment. Many markets are operating in isolation, right? So some of the outliers are doing their own thing, whilst the majority of the market is essentially bleeding out. So what should we look at first? We can take a look at hype. Right, so again, annotations on the chart from the last week or two of analysis. And you can see here, we ran through this last week, attempted the breakout here, 2-hour divergence across the RSI and the awesome oscillator. Clear divergence in momentum against price here. Faked out, came back down, took out this low here. Again, range bound consolidation, and we are now tackling that support and resistance level again. So again, Aaron, to answer your question, this is what most of my support and resistance lines look like. So again, not too wide, usually not too thin either. But yeah, approaching it with common sense. So also just wanted to make a note on hype and just use it as a technical piece. So if we take the high here, so we can see basically that we are within this massive triangle, right? And just wanted to sort of talk on trend lines and analysis. So for many, this would be a very, very valid pattern, right? It has all the sort of hallmarks and ingredients of a good sort of baby pips triangle, breakout, whatever you want to call it. We have consolidation prior to the break, which is something that I've said before to members of my group. Want to see across both diagonals and horizontals. So we've got that consolidation prior to the break, broke out, come down, retesting it, building up steam. If we go to say the 4 hour, again, this was just pure guesswork, but we can see we've got a really nice reset to the 50 level there as well. So looks good. But for me, this is not a valid pattern at all. And the reason being is because I want to see good gaps in between the touch points that validate the level, but I also want to see them be fairly equal. So if we had this high here come up to this, then, and maybe perhaps even here, then that would be great. But the fact that we have this huge gapping structure here, and we have just this massive gap between price from this point here, 22nd of December to the 31st of January, makes this a redundant level to draw, basically. And just wanted to point that out from a technical perspective. Might steer some of you on a better path when you're drawing out your trend lines. This is okay to draw, right? This is okay to draw. We go down to the hourly, for instance, and this looks nice. But taking this high from up here is redundant because of all this hot air in between these two touch points, essentially. All right, so I hope that helps from an educational stance. Regardless, promising to see on hype this, right? These climbing lows, okay? The rest of the market shitting the bed, right? Absolute shit show out there. Hype continuing to put in higher lows. Okay, so that's from a market structure perspective, a very good sign. Also want to look at ALGO. Okay, let's take a look at ALGO. I'm just going to show you some higher time frame views of different markets, different sectors, and you should be getting a very, very holistic overall picture of the markets by doing so. So if we go to the weekly on ALGO, what is the first thing about this chart, looking at both price and the oscillators, that stands out to you? I'll give you a second to type. It will take a little bit to get to me because of the lag. Support, BTC. Okay, anyone else? So that's good to note. High time frame support. Yeah. Resetting RSI. That's the answer I was looking for. Well done, BTC. Yeah. So you can see here clear SR. Again, Aaron, same sort of width in the levels that I'm using. So you can see here, touch point, then came down, retested it from the underside, broke out, and then now retesting that level again on the higher time frames whilst the RSI does this. So again, what we were looking at on the primary markets, BTC, ETH, etc. early on in the stream, we were talking about these breakouts, these overextensions, come down to reset the RSI and then start moving again. So this is that potential point. Again, a very, very pivotal point for a market like ALGO. Start losing this 50 level and losing this support and resistance level. And this basically just becomes a deviation. All right, this is a deviation here. But until that point, this is a very, very plausible point for basically a retest, a reset, and then a move to the upside. Okay, so a very pivotal point for a market like ALGO. I wanted to look at BNB. So again, BNB much stronger, obviously, than a market like ALGO, but you can see exactly the same situation on the RSI here. Come down, test that 50 point on the weekly to a T, right? To a T. And you can see basically throughout this region that the 50 points been incredibly pivotal for the weekly on BNB. So again here, so it was resistance, then flipped it, held above this whole time, overextended, weekly divergence here. Right, so all the signs of a cool off, higher highs on price, lower highs on the oscillators. Okay. And we have that cool off, and that cool off goes bang to the mid, right? So again, everything in here has been supported by the midpoint, okay? And doing so again, we're in a lower time frame range here on BNB. And you can see the deviation here, take out of these lows, and we're back within that range. But the most important thing for me is the higher time frame picture across all of these markets. Seeing if we can hold on to that 50 level or if we lose it. Again, many of these markets have nasty wipeouts to the upper levels. This is a local sweep of a historic level, this being the historic, swept the level here, and then now swept the local level, right? So sweep of a sweep. And again, a very sticky position from that side of things, but no cause for concern really until we start seeing the loss of the 50 level here, okay? So again, some major similarities across markets like BNB and ALGO, despite their price charts looking very, very different structurally speaking and in terms of strength and weakness. But from the RSI perspective, both at a very pivotal level by holding on to that midpoint. What else do I want to look at? Aave. So Aave is more akin to ALGO. Again, same thing. Looking at the weekly 50, needs to hold. Not much more to discuss on that side of things. MNT, another interesting market, one of the stronger markets over the last 6 months or so. And again, exactly the same situation. Despite all of these charts having different price structures, many of them are at the 50 point on the weekly. And it's basically decision time, right? So again, going back to what I was talking about allocating, allocating spot or long position trades across markets like Solana, being the market structure defense zone. You can treat these trades or pockets of exposure in the same manner, looking at something like any of the markets we've looked at. I'll go through to Mantle. We're still holding the 50 weekly, right? This is a very, very valid point for a bounce and a move higher. Start losing that 50. If you're scaling into positions here, cut them on that loss. Clean and clear invalidation. Wait for a weekly close before you do so, and take your stab, right? That's a very, very logical and plausible approach to the markets, using the 50 level as both your entry and exit triggers. Now looking at the almighty anyone that's familiar with this market knows how much of a rampage it's been on recently. This is the strongest outlier in the high caps of the crypto markets by a stretch. Absolute strength here. And yeah, it's basically saying fuck you to the RSI. Don't really care about being overextended at all. And I use this on the lower time frames as an example to show people across some of my social media platforms how simple it can be when trading stronger markets, right? And it's literally just trend line breaks, okay? And I posted this on YouTube and Twitter, and one of the responses I got was bros talking about trend lines. And yeah, rightly so, right? And the reason being is because the markets can be this easy. You just have to understand when to administer trade setups like this and execution styles. Only when either the market is moving this strongly in unison, right? So all the markets are just on a rampage, or if you're trading the strongest market, you can see time and time again how simple it would have been to trade this on the lower time frames, right? So you have the weekly and the higher time frame understanding of strength, and then you just basically hone into the lower time frames, take simple candle closes. However you want to trade these markets, you can take them for small pips, you can take them for longer positions. If you've taken this trade here, for instance, you could take it all the way up here. And yeah, this market has just been, well, this wouldn't have been an actionable trade because the breakout candle was too big. But yeah, basically just wanted to illustrate how easy it can be to trade hyper-directional markets. But it's more the understanding of when to take that stance on the market, and you really have to have a good understanding of weakness and strength, and relative weakness and strength by looking at other markets as well, to trade like this successfully. But the bottom line is that yes, it can be that easy if you do it in the right sense. So I want to look at a couple memes as well. Pepe. So whereas all the others were hugging the mid, this has now lost the mid, right? Not a great sign. But again, very similar to Solana and ETH. We're at that point of market structure defense here. Right, so we want to see this all hold here. Moves to the upside, start losing this level here. And it's very, very dangerous for a market like Pepe. Start looking more like Farcoin here, right? So lost that exact level. So if you look at the daily, for instance, you can see up to this point here, we were still in that sort of market structure defense zone area, akin to Pepe, akin to Sol, akin to ETH, etc., etc. But again, like I said on this live, start losing that, and then it's more of a cause for concern. At the moment, basically, what you can see is retesting the underside here. And I'm not going to lie, Farcoin does look very ugly. Okay, I know it's been the golden child for some time, but it looks very, very ugly from a pure price perspective. You can see that the AO is starting to give signs on the daily as to a sort of diverging structure. So something like this is perhaps on the cards. I'm not saying it is. It's perhaps on the cards. Okay. And you guys know how much I love the AO for showing higher time frame pivots and clues about momentum of markets. Regardless, I'm not going to be moving into Farcoin on the back of this because of the loss of this level. It's much safer to look at something like this and then enter into something like this. Right, that's what you want to play. If you want to look at Fartcoin as a long asset, then much better to look for a reclaim, get more confidence into the trade setup, into the position, and then take it off the back of that. So also wanted to look at SHIB, similar to Pepe. So again, into the point of market structure defense, we can flip over to the line chart. Once again, you can see that this low needs to be defended to retain that bullish high time frame market structure. Lost the weekly. I haven't checked Doge in some time either, so let's have a look at that. So Doge is actually at the weekly on the RSI, so in a healthier spot than Pepe and SHIB. But it's similar chart to Algo, really, right? So at support here. Okay, so holding support so far, holding the mid level on the weekly, and thus looking healthier than SHIB and Pepe. As you guys know, some of the other markets on the meme side of things absolutely smashed, right? Disgusting looking charts, absolutely horrible. Yeah, if you told many people, even just a few months ago, that we'd be looking like this, I'm sure a large host of people would be in pure disbelief. You get a lot of angry comments, a lot of angry responses, but here we are. Okay. So again, could see some relief as we're starting to diverge across the oscillators here. But largely speaking, this is a very, very ugly market, right? A very ugly market indeed. So yeah, this is my list of markets that I'm looking at from a higher time frame sense of strength, right? So these are the strongest markets in the higher time frame across my full comprehensive list of alts, spanning about 400 plus, deep, Hedera, Litecoin. So Litecoin's a very interesting market here. Right? Super interesting. I think I ran through this in the last week's stream or the week before. Took out this low here. And now it's one of the only markets that for me is starting to shape up and look like a potential trade. Talking about TSTs, we were talking about earlier on in the stream, trend side triggers. This here is starting to look like some sort of breakout level, okay, validated on the daily. At the moment, we just have 2 touch points. Would prefer for a third to form here. So if we were to do something like this, that would be great. Consolidate underneath. That would be perfect for a long position. I'd be very happy to move into something like this. That being said, I may still look to move in if we start consolidating here as well. Depends what that consolidation structure looks like. But Litecoin is probably the most promising market in terms of any sort of higher time frame, long position or trade. Mantle we've looked at, Morpho looking horrible. Took the L on this trade 2 weeks ago, I believe. Yeah, so took the L here. The trade was taken off the back of this zone here. So origin, demand zone, ran through this trade live. I believe I ran through this trade on stream as well. Very happy to disclose I got wrecked on this position. This was basically me breaking my rules of looking for breakouts to the long side in terms of trend side triggers, like we were just looking at on LTC. I took my stab here, right? So I took my stab as we moved into this zone. What I liked about this position was relative speed. You want to see that sort of capitulation into these liquidity zones. We had that. Again, that was the point to defend market structure. Okay, so looking at the line chart, we can see that lows have been defended all the way up, and that was the best point of moving into a long position in terms of risk versus reward. Took my stab, albeit with reduced size because it wasn't a trend side trigger, and that's where I'm allocating most of my capital. But took my stab here and took the loss as the market had a board-wide sell-off basically that occurred. You can see a violent stop out occurring there. So on we've covered TRX again, strong on the higher time frames. A very unique looking chart, propped up organically, of course, by His Majesty Justin Sun, sorry. Ripple, I believe we had a request to look at XRP. Again, a very, very strong looking dyno here. Going down to the slightly lower time frames, you can see this takeout of the low. We've actually taken out 3 lows here. So very, very healthy looking market indeed. These 3 lows got wiped. Absolutely brutal takeout here. Again, this was the capitulation event I was talking about on Morpho. And yeah, essentially just moving up. Nice to see a reclaim of the 50 level on the daily, but not much more to say on XRP. Besides, it's looking very strong, right? So we didn't even come down. To form that divergence where price did something like this, put in the bull div, and then whilst doing so, we had this. Oh. All right, so that's what I expected to happen on XRP before any move up. We didn't even get that, right? So also whilst BTC and ETH have been going sideways, it's exactly the same thing we were talking about, right? We're back on the 12-hour, price goes sideways, awesome oscillator giving us those clues. All the stuff I was talking about at the beginning of the stream in terms of the awesome oscillator giving us those clues, that's now playing out on Ripple. A likely outcome on BTC and ETH. This is probably a sign for the future, only going off the back of what we're seeing on the awesome oscillator here. But yeah, regardless, Ripple, very, very strong, right? A very strong dyno alongside TRX. SIG, another strong market on the weekly. Hype. We've done Plume, a fresh Bybit listing, again looking very good here. Simply range bound, so I've got this level here marked out in terms of a breakout level. Again, we've got maybe 2 touch points at a stretch here, but would like to see more action like this, right, before taking this as a breakout trade. But again, keeping eyes on Plume and alerts set as well. BNB we've gone through. Link, another very strong dyno here. So again, one of the strongest. Again, weekly resets from the overextension. You're starting to see the pattern across most of the markets now. Ondo, again, hovering at that mid-level. Sui, bang on the weekly again. And this is a clear pattern across the strong markets, but the strong markets only, okay? So how I wanted to close off this stream is basically show you all of these markets and then go to the full list. And this is basically what the rest of the markets look like. Right, so absolutely decimated, lost key levels, and in a horrible state, in a very horrible state. So again, with these sort of markets here being the best representation of the overall market, these are very, very tricky markets to handle because they have been sold off 90% in what is technically a Bitcoin bull run. When Bitcoin is in a bull run, by default, the crypto market should be technically in a bull run, or at least approached in a trading sense in that manner. So what I've been focusing on for the last 6 months or so is looking for the strongest markets, you know, basically scanning through my watch list and picking out those strong markets. I feel much more comfortable aligning with the trend than taking short positions. And sure, if you'd taken this on the short side, you'd be in a very, very good position indeed. but that's not where my edge lies. I'm happy to sit on my hands, be more patient, wait for the market to resolve itself furthermore, and look for simple breakout trades. The last trade that I took was, or the last significant trade I took with size was XRP. Right, so very simple breakout trade in this area here. I believe it was actually a daily execution. So I took it here. Simple trade. I closed it in the 3.3s. Nothing more than luck on the exit, to be honest. Simply because we had an overextension whilst the rest of the market was looking pretty poorly. So yeah, members of my group will know these are the trades I've been focusing on time and time again. Basically looking for breakouts, expansion, any sharp moves or impulses, any sort of overextensions, close that off, rinse and repeat. It served me well. Yes, I went through the example of Morpho beforehand in terms of the non-trend side trigger trade that I took, but that was an anomaly for me, and yeah, it was a rare exception to the case. So I believe that's all for today, guys. Do you guys have any questions for me? Hit me up in the chat box if you do. Until then, very much a waiter's market by my book. Simply focusing on a select handful of markets, seeing what the play out is on the higher time frames, seeing how those weekly RSI midpoints hold up, seeing if we get that expansion on BTC from the 3-day reset, or if we're looking to come a bit lower and reset on the weekly. Seeing if that negative delta, of course, plays out as well. Simple stuff, not looking at too much, keeping everything as simple as possible, practicing patience, practicing discipline, and understanding that no position is a position as well. All right. So been nice to catch up with you all. Enjoy your Sundays, and we'll be doing these weekly from now on. So I'll catch you next week, next Sunday, 11 o'clock. All right. Take care.